I'm going to not begin with blockchain. I'm actually going to begin with the last 30 years. So all of you are very senior executives, professionals, board directors, and you've lived through a time of unprecedented innovation and change. And all of the industries of the world, every business, every enterprise has changed very substantially in the last 30 years. And you know that, you know it, and you know that the companies that you represent a director of have themselves changed enormously. Now, for Alice and I, there are three main driving global innovations that have powered this last 30 years. The first is the internet and the movement towards a digital economy, which I'll come back to in a moment. The second is the life sciences revolution and the shift to personalized medicine around genetic and DNA sequencing and testing and CRISPR-9, etc. The third is the shift to a not carbon-less, but certainly not a carbon-dependent global economy. And that's really kicking off right now. But there's also a host of other innovations that are also just as fundamental and just as transformative. So we call this the fifth era. We're transitioning out of the industrial era. But the reason I've begun here is because you already understand that. You understand everything around the 30 years you've already lived through. Well, unfortunately, it's not completed. The digital economy of today is only half built. And the reason for this is that what we began with, which was the internet, is essentially a communication platform. TCP/IP, which is the protocol that sits underneath most of the World Wide Web, the internet of today, was intended to be a communication protocol. And it does that very well. And so for the last 20 to 30 years, we've used that feature, that set of features, which are communication features, to connect 4.5, 5 billion people, most of our devices. Many of our industries have become reliant upon that communication platform. And frankly, most of the businesses that you serve have been transformed in the process. But the problem is, because it was a communication protocol, it was never built to be a commerce platform. And in fact, TCP/IP is very bad as a commerce platform. And there are 5 specific things that are fundamental flaws with the internet that we have today. The first of them is its security. The professors and DARPA, MIT, Stanford, and so on that built TCP/IP trusted each other. They were communicating between academic institutions and others. They were sharing information, but they didn't believe that they were going to have secure solutions against hackers and phishers and breachers. And so TCP/IP is fundamentally an insecure protocol. And you see this every day. So most recently, we're beginning to see ransomware, where entire pipelines are being closed down. And of course, the press talks about the fact that the kidnappers, if you will, were paid by Bitcoin. But that's not the important point for you all to take away. The important point for you to take away is that the software upon which the largest pipeline in America runs is insecure. It's fundamentally insecure. And in fact, the bad actors are using technology to exponentially improve their ability to breach, to hack, and the like. So that's the first issue. The internet of today is insecure. The second is it has no inherent system of identity built into it. And the manifestation of this is not just the last mile problem where you don't know the individual that sits behind the device that is connected to the internet, but actually, to a large extent, we don't really know which device, and we certainly don't know whether the content that we are sharing is the content that was sent. So we have a system of global communication that is built upon an identity platform that may have made sense 30 years ago, but doesn't make sense today. The third issue is concentration. We do know that the internet and the value creation of today's internet has been increasingly concentrated in a few hands. They are the world's most valuable companies today, bar none. And the EU, the US, China, all major governments around the world are concerned about that concentration of economic value in a small number of companies' hands. But for blockchain, what's most important is today's internet has no native digital monies and no native digital assets. And so despite the fact that every one of your companies is involved in commerce, every one of your companies participates in payments and transactions, and every one of your companies has a balance sheet, and that balance sheet includes multiple types of assets on it, almost all of that is either paper-based or it is riding on infrastructure that was created to support a paper-based world. And this is why settlement times and costs and processes, even for public equities, are inherently slow, costly, and unable to do the types of transactions and settlements that we expect in a digital world. And I know a lot of you are on bank boards, some of you are on payment company boards, some of you are on boards of retailers and others. All of you are going to be dramatically impacted as we shift to native digital monies and native digital assets. And just to underline the assets point, we tend to think that public equities have been digitized. It is true at the version 1 level, but none of your companies actually know who your shareholders are because you work through proxies, and none of your companies can communicate to in real time to your shareholders, and none of your companies can do real-time compliance because even public equities is only at version 1 of digitization. Well, almost all the world's real estate, almost all of the world's funds, almost all of the world's private investments are still paper-based. They haven't even been digitized to version 1. So in that context, why does blockchain matter? And the reason is that this anonymous group or person, Satoshi Nakamoto, 10 years ago, tried to create the world's first at-scale digital cash, a native digital currency for a digital world. And in order to do that, they needed to create a protocol, the blockchain protocol, that could complement TCP/IP, the communication protocol, in solving the issues of security, identity, distributed, and in order to establish a digital money, and that is Bitcoin. So Bitcoin is important because it is the world's first native digital distributed money. It is a prototype for every digital money, including the digital dollar, the digital yuan, the digital euro, etc. But it also is conceptually a model of a real-time digital asset. And all the world's assets are in the process of being digitized. And 3 years ago, if I had said that, the world's largest banks and asset managers might have sat back and thrown rocks. Today, I can tell you after having spoken to them that every major exchange in the world, every major asset manager, every major bank is now fully on board with the fact that we will have digital monies and digital assets in a native internet-enabled way in the next 5 to 10 years. Well, why does that matter for all of you? It matters because you are all in commerce. Every business is a commercial enterprise. And as I said before, and I'm now wrapping up, that means that all of the payment infrastructure, all of the accounts payable and accounts receivable infrastructure, all of your balance sheet activities, all of the assets you hold, all of the commerce and transactions you do are going to shift to new infrastructure. And that is a bigger challenge than year 2000. That is a bigger challenge than the initial rollout of the internet, because the internet was about communications and you could bolt it on. But the transition to digital monies and assets is about changing the core infrastructure of every business in the world. especially all of the financially focused businesses of the world. And then just to nail this coffin firmly shut, the other reason you cannot afford to ignore this is the native digital citizens of the world are now becoming the majority. They are now in their early 40s. They are digital first, they are mobile first, and they expect all of their products and services to be delivered to them in real time, low cost, digital first approaches. And unfortunately, for some, they will put their money towards those companies that serve them in the way they want to be served. And they are accumulating wealth, and they're moving into their power years, not only do they have the most disposable income to spend in many businesses, but they are also moving into positions of power. Because as they go into their mid and late 40s, they increasingly will be the regulators, they will be the congressmen and women, they will be the leaders of the world, and they will transition the world to a native digital platform. And businesses that want to resist that will lose.